Hope everybody is having a great weekend so far. Today is October 15, the middle of the month, and so we will review the data on unusual options activity for the entire market. As you can see, just recently on October 11, there was an article on Market Watch about how the rally in US stocks was sparked by the unusual options market trading activity. And so this is one of the main reasons why it is so important to look at this data on unusual options activity. And so if you've been following this channel, you know how important it is to be able to predict the stock price movements with data. And so if you want to learn more, make sure to subscribe and hit the bell icon. You can also read this article. You can Google it, and you'll see that it talks about how this was done. In summary, they were looking at the rising put-call ratio. You can see here, this is what that's about, the put-call ratio. And it slipped down to 0.79. Okay, it jumped up and went back down. So that's something to look for. So you could see that it was at one point at 1.667. So as this thing moves up and down, you can gauge the market movements. Okay, and to find the put-call ratio, you can actually go to the options statistics. Okay, so over here, you can see today's option statistics. And over here, when you pull down that menu, notice that over here on the right side here, there's a P/C ratio. This is the put-call ratio here. Okay, so it's currently at 1.4. So what that article was saying is once this suddenly flips and goes under 1, then this could be a bullish sentiment, because then the calls outnumber the puts. Okay, so here's the total volume, and so that's what they're looking at to see the shifts in market sentiment. Okay, so this is why it's very important to look at this data. And so that's what we do on this channel. All right, so let's take a look at what is to come. And on the last trading day, on Friday, October 13, on what happened for the SPY. There is a lot of data on this index, so we'll focus just on the largest quantities, the biggest ones here. Okay, so like this one here, 23,933. Okay, so this was expiring December 15. They were buying the 410 strike puts and selling the 412 strike puts. They're all done at the same time at 142 at the 49-second mark. Okay, so let's take a look at the options chain to take a look at that. So when we take a look at December 15, the 412s are all the way down here. Here they are. And you can see here that actually the open interest is about the same as the volume here, 33,000. So that's quite unusual. Here's the 410. Open interest is larger than the volume. Okay, so if you've been following this channel, you know that this is also a very important metric to see whether or not these trades on these options are opening or closing, because that does make a difference. Okay, so for something like this, we are not sure unless we get more data. All right, so that is why it's important to monitor this, or you can subscribe to this channel and we can update everyone when we detect unusual options activity. All right, so based on this data, what they were doing here is they were selling the 412 strike puts and buying the 410 strike puts. And when you analyze this trade, you can see here that this is what the trade was. Okay. And this trade here, you can see essentially is a mildly bullish trade. They were selling the volatility. Okay. So as the price moves up on the market, there's a limit to the profits at the credit that they collect of $35 here, right? So they were selling volatility for this trade, all right? We can see from the Greeks here that this was a 1.56 delta, positive theta, and a negative vega, which tells us that they are expecting a decrease in volatility, okay? That the VIX will not increase any further. They think it is going to decrease. When we say they, we say what we mean is the wealthy investor who traded this, because this investor has a lot of capital. They sold the 412 strike puts, which means that that's a naked put, right? 412 strike means they're willing to own 100 shares of the SPY. And so for one contract, that was 41,200, right? And since we know that they did a total of 23,933, we had to multiply by the number of contracts. And so you can see that this trade was $986 million, close to $1 billion. So this is a very rich, wealthy investor who did this trade, who is taking advantage of this volatility and is willing to own the market SPY ETF at $412 should it go down below. Otherwise, they will just be able to profit and keep that $35 credit per contract. Okay. So let's now move on to the NASDAQ QQQ ETF to see what we have for this market index. Okay. So we take a look. So here it is. So the largest, biggest for October 13, Friday, were these 10,300 contracts. Okay, we can see here what's very unusual is actually that time frame is about that time for the SPY index as well, right? So that's quite unusual, right? So they were buying the 365 strike puts and selling the 365 strike calls. Okay, so let's analyze this trade and see what is going on. 365s, but they're different expiration cycles. That's something to keep in mind. It is at the money because the QQQs are trading at 365. So October 20s, the 365s over here. We can see here that the open interest was greater than the volume, 365s. So these could also be closing trades. But let's analyze this as if they are opening trades. Okay. So they sold the 365 and they bought the 365. Actually, they sold the 365 calls, right? So not the put side. So we have to actually take a look at the call side. So here it is on this side. And it's also the same situation where the open interest is greater. Okay. So they sold the 365 calls and they bought the November 17th 365 puts, which is over here. And you see the open interest here is also greater than the volume. Okay. So they bought this. And when we analyze the trade, this is what it looks like. As you can see, as the price goes up, it loses profit. As it goes down, it gains in profit. So this is a short position. You can see the negative delta, a negative 96 delta with a positive theta. Okay? But we want to caution everybody that because this is a separate time frame, it is likely, quite likely, also that they roll the trade. What we mean by that is that they closed the Octobers, okay, and they bought the Novembers. They essentially rolled their Octobers to the Novembers, okay. And so by doing that, then they're actually just they just have the 365 strike puts, okay, which is still bearish, right, by buying those puts. So based on this analysis of both of these ETFs on the market, it is looking more bearish than bullish, okay? And technically, if you take a look also at where we are, notice how we made a high here for the year, and then we made a lower high, and now we made another lower high, okay? So let's take a look also at the S&P500. Same situation. High here, a lower high, and another lower high. And a lower low and a lower low. So technically, does not look very positive for the market. It looks like it is more on a downtrend right now. Okay, so based on this analysis, we would be very careful, making sure that if we have bullish long trades on, that we also have hedges on the market. Okay, so that's also very important to have certain using options to hedge your positions will help you reduce your risk on the overall market, right? And so if you are interested in how we trade or the stocks that we pick that have the data that tells us more clearly what the wealthy traders are doing, make sure to join our membership where we share exclusive videos to our members only on the data on unusual options and also our strategies using options. All right. Comment below what you think about the market. Again, because this is an index, sometimes, a lot of times, people use the index to hedge. So even though the data is telling us that it is bearish, it's possible that a lot of this market data could also be hedges taking place. Okay, so it's very common to use the market indexes to hedge the bullish stock picks that you have. That's what we do. And so we are not necessarily bearish on the market. We are actually more bullish. Earnings seasons is also coming up. And so we have more bullish trades in our member trades where we get in on taking larger position sizes. And then we use the market indexes to hedge our positions as well. And so if you are interested in that, make sure to hit the join button on our channel to learn more on how you can start beating the market using this type of data, the unusual options activity. I want to thank everybody for participating, and take care, everybody, and have a wonderful rest of your weekend.